So you want to trade on the GMX decentralized trading platform, maybe with leverage, but you're not sure how it works, or you're a little bit scared about using leverage to trade, especially for the first time. Well, this video has you covered, and I'm going to give you a quick, simple tutorial on how to use the GMX app with leverage when you're trading, but definitely you have to be careful when doing this because there's a risk of getting liquidated, as I'm sure you know. So for starters, you're going to want to go to gmx.io, make sure that it's the actual legit website and not a scam phishing site. Launch the app, and this is what it looks like. So there's V1 and V2. I recommend using V2, which is the newer version of the platform, and they're obviously moving most of the liquidity to V2 as well. So just generally, it's a better way to use it. Now, you're going to want to connect your Web3 wallet. In this case, I'm using MetaMask, but you could use whichever wallet you like. And once you're connected to the platform, then you're going to want to switch to the Arbitrum network. And if you make a leveraged trade on the GMX app between now and October 8th, then you actually qualify to mint one of these NFTs from Arbitrum, part of their Odyssey campaign. It's possible there might be another future airdrop associated with this, but that's pure speculation. In any case, it's on the Arbitrum network that you're going to want to use it. You could do it on Avalanche, but I recommend Arbitrum. And actually, I used this platform myself for the very first time just the other day, so it's very fresh in my mind, and I know exactly how it works. Although it does seem a little bit confusing at first, it's not so bad. Now, there's the option to go long an asset, so that means if you think the price is going to go up, then you can long it, or there's an option to go short an asset, and that means if you think the price is going to go down, you can short it. Now, these are perpetual options, meaning that you're not choosing a date at which the option closes and is then put to you. And so you are perpetually either going long or short an asset. Now, you can also use the swap feature here, but there's other apps that are probably better for that. And really the whole point of the GMX trading platform is to be able to use these perpetual option trades with leverage. So how does it work? Well, for starters, you need to decide what asset you're going to use as collateral, I guess, or as your trading asset. So in this case, I have some ETH on the Arbitrum Layer 2 network, and I'm going to use ETH. Then you have to decide which asset you want to trade. And these are all of the different assets that you can either go long or short. So you could use ETH to trade ETH, or you could use ETH to trade ARB, the Arbitrum token. So let's say I wanted to trade the Arbitrum token, and I wanted to go long Arbitrum, and I'm just going to use a small amount of ETH, so 0.01 ETH for this trade. So using 0.01 ETH as collateral for this trade, I can then use the leverage slider to decide how long I want to go. So if I use the minimum leverage, which is 1.1x, then I'm going long for 19.55 ARB tokens. But if I use maximum leverage, which is 50x, then I can go long for 858 ARB tokens, although the leverage is also linked to liquidation. And so the higher the leverage, the smaller the price movement needed in the asset to trigger a liquidation. If I only used 1.1x leverage, then it's going to be very, very difficult for this to be liquidated. It probably never would be liquidated unless the price of the ARB tokens plummeted. Yeah, so you can see down here that the liquidation price, if I went leveraged long to the tune of 1.1x, then the price of ARB tokens would have to reach 13 cents per token in order to trigger that liquidation. And currently, ARB tokens are trading at 92.6 cents. So that would require a very, very steep decline in the price of the asset to trigger liquidation. However, if I go long to the tune of 50x leverage, then the liquidation price is 91.9 cents compared to the actual price right now, which is 92.7. So there's a very, very small margin of error there. And if you're going long to the tune of 50x, then you really, really need the price of the asset to go up only, because if it drops by even a tiny amount, you'll be liquidated and you'll lose the collateral that you put into the trade. And even if you go from 50x down to say 15x, you're only buying yourself an extra couple cents in liquidation price, because the liquidation would be at 87.5 cents at 15x. So it's still not going to take a very big drop in the price of the assets to trigger that liquidation. So the more leverage you use, the higher the risk and the greater the chance of having a liquidation. So what I'm going to do for this trade is do only 2x leverage, just a simple 2x leverage long trade on the ARB token, and the liquidation price of this is 49 cents. So the price of ARB would have to drop by 42 cents before my liquidation gets triggered, which is not bad. So once you've decided how much you want to put as collateral into the trade, and you've decided how much leverage you want to use, take a double check, make sure that you like what you're looking at. The liquidation price is reasonable, and of course these are the fees down here. So there's transaction fees to do every transaction because we're transacting on the blockchain. But once you like what you see, then you hit the button here, confirm the transaction, and it's gonna pop up in your MetaMask wallet. I'm gonna have to pay 49 cents in gas fees for this transaction, so we'll hit confirm. And there we go, I can now see my open position, which is an Arbitrum long position. And this will remain open as long as I want it or until the liquidation price gets hit. Now, if the price of ARB goes up, then I make money, and if the price of ARB goes down, then I lose money. Now, I will show you how to close out a position once you've opened it, so either when you're ready to take profits or if you want to just cut your losses and move on to the next trade. But first, let's take a look at what else you can do in terms of trading on the platform. So you can short, and this is the same process. You choose which asset you want to short, you choose how much leverage you want to use, and then in this case, the liquidation price is going to be higher than the actual price of the asset, and you want it to go down. So the more leverage you use, then the less it has to go up in price before it triggers your liquidation. Now, another thing you can do is use limit orders to place these options leverage transactions. So let's say the price of ARB tokens right now is 92.7 cents. If I thought it was going to go down a bit to, let's say, 90 cents per token, and that's when I wanted to get in with my long trade, then I could set up a limit order and use the same slider here to choose how much leverage I want. And then if the price hits my target, then it's going to automatically open up that position for me. And this right here, the trigger, is something that you can set up once you have an open position to close it at a certain price. So if I wanted to take profits on my open order at a certain price, then I could set that price, let's say $1 per token, and I could set up a trigger to automatically close my position and take profits at that price. Or I could also set up a trigger if I thought I wanted to cut my losses at a certain price, so let's say 85 cents per ARB token, then I could set up a trigger on the downside as well. Now, something else you might want to know is if you were getting close to a liquidation risk, then you could actually add collateral to a position here, and then you would reduce the potential liquidation. So if you were worried about that, you can deal with that there. You can increase the size of a trade, you can trigger a close, or you can also just close it down here. So what you would want to do if you're going to close an order is either set a trigger price for the close or just hit the close button here. You can decide how much of the position you want to close. So let's say max, and then just confirm the transaction again in your MetaMask wallet. You'll have to pay some fees again. So here I'm doing this for science. Confirm the transaction, and the position was closed. So if I go to my trades section, you can see that it was closed out here. I decreased my long by the full amount. Now, one other important thing to mention, on my other wallet when I was doing this for the Arbitrum Odyssey campaign, I did a trade, I closed out my position, and then when I went into my wallet, I realized that I was still missing the ETH. Well, where does it go? I closed out my position, but I'm still down that 0.01 ETH that I put into the trade. So for a while, I thought maybe something had happened and I got scammed. But actually, when you close out a trade position on GMX, it doesn't go back into ETH. It actually goes into USDC tokens. And so if you don't already have the USDC token imported into your wallet, then it's not going to show up. But don't freak out, your assets are still safe, and I'll show you how you can access them. If you're in a similar situation to this, all you need to do is add the USDC token to your Web3 wallet, and then you'll be able to see the assets that you just got from closing out your position. So what you need to do is just find the USDC coin or the USD coin contract on the Arbiscan website, click on that, and then add it to your Web3 wallet by hitting on this button right here. It's going to pop up, and you can see there that that's that USDC that I thought I was missing. So add token, and now when I go back to my wallet, it shows up right down here. And if I want to get that back into ETH, then I'm just going to have to swap that somewhere else. So yeah, that is how you use the GMX platform to do leveraged options trades, either perpetual longs or perpetual shorts on crypto assets. Hopefully you found this interesting and useful, and definitely make sure to manage your risk, especially with this one, because when you're using leverage, like I said, it's very easy to get liquidated if you don't know what you're doing and if you take too much leverage. Have fun, stay safe out there, and I'll see you in the next video.